All right, so we're live. We have this triangle drawn in here. Earlier we had the triangle in this area. I think now this is a bit of a better triangle now. And we have more tests of the lines on this triangle. I was considering putting a sell order below this bar. The reasons for that was that we were below the moving average now. We had a couple temps up that are failing, and we're getting a good looking bear signal bar. My concerns with it were that so I like when I get a bar like this, I like to go for 5 points. And for me to go for 5 points, I would have to go below this low here. So that would act as support against me. Also, I'd have to be risking 6 points, which is a little bit more than I want to risk when I'm just going for a reward of 5 points. So I liked how it looked, but there were several factors against it, and it wouldn't have mattered anyways because we didn't go below this bar. So now we're on this pullback, and it looks like this is going to come back to the middle of this triangle before heading in a different direction. I have the triangle drawn in. You can look at it that way. You can also just look at it as a trading range. And so I get rid of these triangle lines. We had a strong leg up on the rally, and ever since then we've just been in this trading range. Now we're getting look at this bull bar. We're getting a large bar in a trading range. So in a trading range, you want to scalp. You want to go for small profits. And so we're in a trading range, so we would want to scalp. But now this bar is large, so our risk would be large. So we'd be going for a small profit with a large risk, and that doesn't make much sense. So I think definitely this is the time to just kind of be sitting on the hands and not be trying to like force trades in here. Yeah, BP says not the best risk reward. And when I used to see like a big bar like this, I'd kind of get drawn to it, and I'd start taking trades around it. But as we look, the context is trading range. So trading range, your profit potential is small. Any move up is likely to get sold. Any move up, and these move downs are likely to get bought. So your follow through is going to be bad. And then you have to risk a lot because, look, I mean, this bar is large. It's almost it's a 10-point bar. So your profit's small, your risk is large. So for me, it's best to wait. Failed 3 times, make a new high. You know, yeah, not sure exactly which level you're talking about. I mean, it could be like this here. We could look at that. We could look at that being like a wedge there. 3 pushes up, a wedge, and then sellers below that for the wedge. Let me go over to just peeking at the other charts here. A lot of sideways across the board. So earlier we were talking about 3 parts of the day. We have this trend up on the open. Then in the middle of the day, it transitions into this trading range. And as we kind of start to get more closer to the end of the day, around 1 o'clock, 1:30, market will probably start to try to break out of this range and go in one direction. It could make an attempt up here. I think that'd be rather aggressive. Or it might make an attempt back down to the open of the day, yesterday's close. We're kind of right in the middle of those two. So just need to give it a little bit of time. Looking at the tick chart, basically been sideways on the tick chart for an hour now. When on the tick chart, you like to see it be, this is more like what you want to see on the tick chart when you're looking to enter trades. Or this. Most of the time, like on one side of the moving average, so most of our bars are below the moving average here. Then any attempts up that fail, can possibly lead to swings in that direction. That's the kind of market you like to be in, not so much this sideways market, where one side doesn't really have a clear. One side's not clearly owning the market. Hey, what does BP stand for? Yeah, potential cup and handle. Yeah, definitely could be potential for this to definitely potential for this to become that handle and then make a move up. I think still need more time though. I mean, this is the first breakout of this trend move down. You know, strong trend down, first breakout up usually fails. Usually has to test back down first. So I'll draw on a line across here. We can see at this price, it was resistance until it broke out, and then it's pulled back here, here, and here. So now if we break below it, then this would act as resistance as it tries to come back up and test it. So if the market can get below here and stay below here, then this should act as resistance when it tests back up, and that could possibly lead to a setup to get short. You'll see this a lot on the 2000 tick chart as well. This isn't a perfect example, but you have this level here, and kind of roughly all through here, it continues to act as that support and resistance. Big bear bar, closing below these recent lows, not quite closing below this low over here, which I think was more significant. I would not sell the close of this bar because we're at the bottom of the trading range. So this might just be a failed breakout of that trading range. Most breakouts at trading ranges fail. So just because I'm starting to see a big bar doesn't mean I should just jump in and get excited about shorting it. But we are interested in seeing how it reacts to this resistance level here. Hey, good to see you, Brandon. I'm glad you're watching the stream a bit here. Yeah, kind of around that level you're pointed out. I mean, kind of around the 72 to the 70 area. I think I would rather call it the 5770. That's where the overnight high is here, and that also was this level that it tested a lot yesterday. So this is kind of a trick you can kind of think of as you kind of get more experience in trading. this is a potential breakout here. We're at the bottom of the trading range, so probably not the best sell because we're low in the trading range. But if the market's going to go down, it's probably not going to go much higher than it is right now. So one thing you can do is pull up the lower time frame, and you can look for like a bear bar to short blow here. So maybe you can get away with risking a couple points and go for a swing down. So as you get better reading your charts and you get a just better feel for how the market moves, you can find examples like this where if it's going to go down, it's probably not going to go too much higher. So I could try to find a short on a lower time frame. So my risk is small, but then I could still try to get like a swing profit. So that might be better instead of instead of selling this close with a stop up here, you can sell somewhere during here with a smaller stop, and then be able to try to get a swing down. So you can kind of convert it into a swing trade with a tighter stop instead of having this trade be with a larger stop. But so far I'm not seeing like a good enough bear bar that I'd be interested in selling below here. And even if I do, I'm not going to. That's not often what my style is, but that might be something that you guys would like. So I think that's something that you can consider. That's just kind of that's just a way for you to be thinking throughout the day. What do you mean by a 1-2-3 play? So yeah, I mean this might happen. Are you talking about these two candles right here? One big bar, small little bar, third bar takes out the green bar. Yeah, so I think there's a potential short from this now that we're below this support level. Now it's acting as resistance. And I'd like this moving average to get lower here before getting short. But there's potentially swings that could come from this. Yeah, I think I'd want still to see more, a few more bars here. I'd want to see the bulls try harder to get above this, and then at that point, the moving average would be closer, and then we could really see the bulls give up after their attempts go higher. But I think it still holds true. I mean, I think you can look on this lower time frame and try to go for swing shorts. You know, if you're selling some below that, you know, you risk 2 points and you'll try to go for like 10 or 20 points. You know, risk 2 points in here. And then basically you probably try to swing down to the open of the day. That's, if I was going to swing, I'd really try to go for like 20 points down to the open of the day. You know, so most of the time you're going to lose your 2 points, but when you win, you know, I could see this selling off down to the open or lower. Like I said, you know, let's say a good bear bar forms here. It's not the short I'm going to take, although I think it would be okay for a swing short if you get a good bear close. Like I said, I would rather wait to try to see the bulls try to test this up more and be closer to the moving average, and then try to short and get like my 5 points. So if the bear bar closes like this or better, you know, I think that's okay for a swing short. So it'd be okay for a swing short. It would not be okay for a scalp. So I don't think you should be trying to sell below this and go for like try to get like 2 points. So when I say that, it opens up an interesting idea. Well, if selling for a scalp is a bad idea, then would buying for a swing be a good idea? So if you buy, put it stop couple, put your stop a couple points below, and then go for basically you try to get up to above the high of this bear bar. That's kind of an interesting idea. So if you're if you can identify a bad trade, then you know, you can do the opposite of the bad trade, and in theory it should be a good trade. So we'll kind of monitor, like if someone had shorted here. I'd rather not short below this bear bar because that's at least 4 points on the tick chart. So I think this would be probably better short because its risk is less. You know, risk a couple points and try to go for like 20 points down here. I think if you're so I mean, if you're someone like that's like a beginner watching the stream, and I've mentioned this before. I think anytime I say that's a reasonable swing trade, you know, then I think that's reasonable for you to be taking. You know, I don't I don't take a lot of these swing trades because there's just certain trades that I like to be taking, and this is just what I want to be focusing on. But these swing trades, they're good for beginners or advanced traders to be taking. And especially as a beginner, if you can get in the habit of taking swing trades, and you know, you'll learn a lot by only taking those swing trades. So like if you sell below here, put your stop above and go for at least two times your risk, or go for more like down to the open. That's going to be really good practice for you. So at a minimum, it should be at least an okay trade to take, but you're also going to get in the habit of taking those swing trades and managing them. So when I'm saying like a potential swing trade here, you know, I think what I would do if I was on the other side of the stream, I would trade very small and then go ahead and place that. So either paper trade or trade very small and take it, and that'll just kind of get you in the habit of identifying where the possible swing trades are, and get you in the habit of going for it'll just get you experience with managing and taking trades where you have a larger potential for a large reward relative to a smaller loss. Bitcoin's actually kind of at an important price here. This breakout point, and we have this high, then it broke out above it. Now it's pulling back, so it's testing this breakout point. It's also testing 70,000. So I think this is a fairly important area that over the next week it really needs to be able to find a bottom at this level. And this is the Bitcoin daily chart, by the way. So if I had shorted here below this bear bar, I would keep my stop here. Because you got this bear bar, and that's kind of the minimum that the bears want. Of course, you don't want to see this tail on the bottom, but I don't see a strong reason to get out yet, so I would keep my stop above there. You know, 2000 tick, same thing. If I had sold here, keep my stop there. Probably on the 2000 tick, I wouldn't, with us only risking like 2 points on this, I wouldn't do anything different with my stop at all. These smaller time frame bars aren't as meaningful. The idea is that you should manage it the same. So, but I still don't think you have a reason to be getting out of your shorts here yet. I mean, basically, I'd rather have this break down way below, and then I move my stop somewhere lower, like to at least break even. So either that happens, or I just get stopped out with the 2 point loss there. That's how I would do that. if this bear bar closes strongly, I'm tempted to get short. I'd rather not be shortened so far from the moving average. And, effectively, we still are just low in this trading range. All right, so a doji, not good enough to sell below. All right, good. Less delay. So the settings that I adjusted worked out to make it less of a delay. So once again, if you had shorted here for a swing, we haven't seen a reason yet to be getting out. So I think it's still okay to hold on to your swing short. The bears are definitely trying to turn this over. I think the bulls might be on their last legs here of trying to stay up. I think if the bar closes like this or better, that'd be okay for a swing short. And to me, the target is the open of the day. So if this bar closes near its low, then you'd be able to get better than 2 times your risk. And it'd be in an area where the bulls might be giving up soon, so I think that'd be reasonable context and reasonable swing as long as this bar doesn't get too large. If it gets too large, then which I think is happening now. Now it's getting too large. Really like the short is up here. When we can maintain that smaller risk with the larger reward. Now it's getting too large like this. I think it changes the type of trade you have to take. is what we were looking at before, was some sort of trade similar to this, where you can have a, clearly have your stop above a bear bar and go for 2 times your risk. Now, this is kind of just confusing it. Like if you were to sell below this bar or sell a close, your stop's going to be much farther away and your profit's going to be less. So what's good for this bar, it closed below these other lows, closed below a lot of lows. So that's good for the bears. Probably would be sellers above this bar if it got up here. At this point we've had 7 or 8 bars now with the high below the previous high. So it's this stair stepping down. So like the first time it goes above one, it'll probably be able to be sold. So if you had sold below this, which I can't say for sure, but maybe that's why maybe there were some buyers here from that going for 2 times your risk there, which created that tail on the bottom. Not entirely that, but that might have had a factor to why there's a tail there. But looks like you would have been able to get out with 2 times your risk if you did that. I think if I was doing that, I'd get out with partial profit and move the rest to break even, and then try to get to your open here, because this open is a big target. We have the open, we have the close of yesterday, the low of the week, and we have some important targets below that might be worth holding on to for taking the risk of that swing down continuing. And there are buyers at this level, the 57.70, which is this. We can see it's been acting as support and resistance recently. An issue for the bears is that this is potentially a wedge bottom. First, second, third push. Then we would have a micro double bottom here as well. So possible wedge bottom, micro double bottom. Then from that I would expect there to be buyers above this bull bar. So I was talking about there being sellers above this bar. If someone's going for 2 points, they'd have to get down to 75 to be able to get their scalp. So bulls have to be moved down to here to get a scalp. So here's the hourly chart. VP's talking about a cup and handle. And yeah, we can definitely see the cup forming. The cup is here, handle possibly forming here. With that being the hourly chart, there's only 3 more bars left today. And today's Friday. Unfortunately, for someone trading the cup and handle, that trade, my entry might only come up here after we kind of fail to go lower here. Lots of reversals today. Ever since the open ended, ever since we ended this trend we just had, any strong move has just been reversed. Any of these strong bull bars, bad follow through. Strong legs down, bad follow through. Biggest bear bar of the day, biggest bar of the day, and immediately bull bars, bad follow through. We are coming back into this resistance level, and the moving average is starting to carry down. We'll see what the bulls can do here. I expect after this wedge bottom, they should be able to at least get a second leg up, a small second leg. Congrats with the channel. Yeah, thank you. It's the channel. It's been up for a few months now. It's kind of been fun to learn these different, learn something new, like making the videos, working with the recording, streaming. Back on Monday, yes. So we'll be, we'll be back on Monday. Should be able to do, we'll should be able to get the stream going. I would think by like 9:30 or 10 on Monday. I'm gonna look at last Friday. See how last Friday looked. So at 120 here, this is how last Friday was looking, and we were having this big sell-off. This sell-off, on Friday was the open, lows, highs, and closes of the prior week are more important on Friday. I mean, we're kind of way away from, the close of last week is 60 points above, so I don't expect to get to that today. But that's something to watch out for when you're trading on Fridays. Like how did last week close? Where is the open and high and low of the current week? Yeah, I mean, yeah, we still have a little bit of time. This could still be considered the middle of the day. So like trend on the open, transition into trading range, and so we're still kind of in that middle to the end of the day time frame. Testing the moving average. So after I think we'll probably get a little bit more up because of this wedge. Mark tried to go down 3 times here, 1, 2, and 3. After a wedge, you can expect 10 bars and 2 legs in the opposite direction. So we only have 3 bars so far, and only 1 leg. Now this is a fairly tight channel here, so let's go to lower. Let me go to back to the 2000 tick. So this is what it looks like on the tick chart. A strong move up, tight channel. So yes, this is like a pullback to the moving average, and there's probably some sellers at the moving average, but I like to avoid selling at the moving average when I've seen a tight move up to it. As you can see that there's a good chance that the bulls, are actually strong and will be able to move the market up higher. So wedge reversal should get at least another small second leg up after this. My issue with today is there's really no, we have these large bars, but there's really no direction. I think that's what makes the day tough, and that's what makes the day risky. You see these large bars. If you had bought this bull bar, you would have failed. But if you sold this bear bar, you would have been able to get at least a scalp. Large bars in this trading range, bad follow through. So I like to see more direction, or I at least like to see the signs that one side is giving up. Like I was saying, like why this here is a good short. Clearly one side is winning. Then we are in a trading range, but one side is trying multiple times to go somewhere and then it can't. And you get a good close below the moving average. versus this is more of the time to wait. Now, I'm sure lots of traders, I mean, I could have just been trading one contract or and gone down to the micros and just been, like bull bar, buy above it, buy more lower, and then, gotten out on the pullback like this, or sold somewhere and, you know, and sold on pullbacks. Um, a lot of people are doing that, but the issue is once that breakout comes and all those little wins, you can give those little wins back quickly. So with these bars being large like this, I'd rather just not even play that game. Robinhood is going to have futures trading soon, and from what I understand, it would be like 50 cents a contract to enter a trade. That'd be really good. I mean, it sounds like they wouldn't give you a very good fill, So I mean, the money, sure, you're not paying much in the commission, but the money is made kind of on the other side of it, on where like the market makers are getting like a better fill. So you're kind of paying a little bit there. But I think that's kind of exciting. I like Robinhood. I've always wished Robinhood had better trading features, and you could do something like futures on it. So once that's released, we'll definitely do some of that. Probably wouldn't be like my permanent broker to trade futures on, but I think it'd be fun to check it out. And yeah, so I think you're exactly right. I mean, I think of all the people that are on Robinhood that trade like that, and they'd never trade like the futures. Um, I definitely think it would bring more volume to something like the E-mini, like for example. I was talking about this wedge here. I was talking about this wedge here as well. Wedges are, you know, there's lots of different things you can do on a mark on the chart. Lots of different ways you can trade, but wedges wedges are real. Okay, I mean, first push, second push, third push, good bear bar. Sell for a swing. You're gonna lose 60% of the time, but 40% you're gonna be able to get two times your risk. Something like that. Uh, First push, second push, third push. I feel like now this bar is larger, and that might be a bit aggressive, but we can see how much buying has come after this wedge. So at a minimum, I think if you're seeing a wedge, you want to be trying to, like at the start of the day, we were talking about this wedge here. Now there wasn't a short here because the market didn't go below this bear bar. But if you were long, I think at a minimum, after seeing this wedge, you want to start to be thinking about getting out of your trade. But like I said, and there was no bear bar to exit below. Well, it never went below a bear bar, so you wouldn't have exited. But if you're in a position, like if you're long through here and you start to see this wedge, I think at least you want to be getting out of, you don't have to short here, but at least you want to be getting out of your long there. If you're short here, you at least want to be getting out of your short and above that bull bar. So watch for wedges. Those are, not only can they get you in good trades, but they can keep you out of, they can take you out of a trade that's gone bad. Hey, if you guys ever have any stocks you want me to analyze, let me know. I can pull it up and we can look at the chart together. Any stocks or any other like futures markets, I'd be happy to check it out, look over it. So after this wedge, we expect 10 bars and 2 legs in the opposite direction. So far we've gotten 5 bars, and so first leg pull back. So now we'd expect at least a little bit more up. We'll have to see. This might just bulls might just get overpowered here. The direction has been down for a while now. So, this wedge, it's kind of, we're expecting there to be more up, but it's difficult because we're effectively going into the top of this like channel 3 here now. So it's kind of competing patterns there. So this market has the potential to get down to the open of the day and lower. So, when I kind of start to think like there might be a big move, then I will peek at the tick chart and see if there's, some sort of entry similar to like what we were kind of talking about in this area for like a swing. So this is a bit of a surprise bar, but it is kind of holding to the theme of the day where like strong bull bars get reversed. At the same time, strong bear bars have been getting reversed. I think we're getting closer to that point where we might not get reversals and instead get a breakout. So are there more buyers of this bar or sellers? I think there's more sellers of this close. I think people can sell this close and either, we go straight down and test the open, or they could be able to scale in higher. I'm definitely tempted to sell here. I think there's going to be a little bit more down, especially with, the open of the day as a target. I wonder, it probably wouldn't be unreasonable that this could be a swing short here. After all these attempts for the bulls go higher, I guess swing short here, going down to test the yesterday's low. Is on the weekly chart, with this being Friday, bears want this to close as low as they can. So there's a potential that they can get that swing down to get down here. Now, of course, your risk is large. A little more than 15 points. But trade small enough, and I think there's a decent chance that the market will want to test down here. Gold's kind of selling off a bit. I got to be away from the computer for a sec, but I'll be back in a few minutes. All right, so I can see the market hasn't just completely fallen apart. Market is pulling back to this important support resistance level. You know, it tested it here. And if we scroll back to the left, we can see the other times this level has been tested. So now that we're below that, it's a good sign for the bears. So for me to take a short, I like to see this test here, pull back, test again, and then get a bear bar, and then look to sell below that bear bar. So we're still getting the same type of market where, you know, strong moves are getting bad fall through. So 3 bear bars, and then now we're getting this deep pullback like this. I didn't mention the idea of buying below this bull bar. So if we just look at it like as if we were watching it live, you know, this bull bar closes. It looks like it would be reasonable to buy below it. You know, we get 4 bull bars up, right above the moving average. Looks like placing a limit order to buy below it would be, you know, a reasonable idea. We're probably going to get a second leg up after that. However, I have a rule to always avoid trades like that when we're possibly at the top of a channel. And, you know, the channel might have been something like this. So whenever we're possibly at the top of a channel, I don't want to be buying below a bar, because really at the top of a channel, this is the sell zone. So I don't want to be buying high up in what could be a bear channel. So even though we were talking about this wedge pattern here, and then needing a second leg up after that. Anytime we're possibly in a channel, I'm not interested in buying below a bar near the moving average at the top up here. So just a little, a little nugget of advice there. So now we can see the market is finding resistance at this level. So I would either want to find some sort of second entry short on the 5-minute or on the tick chart. So I'd want to see it try to go up one more time above this level and then get another bear bar and then sell below that. Potentially you could argue that this would be a short below this bar here for a swing trade. And as long as you take it with it for a swing trade, I think that's okay to do. As long as you're going for 2 times your risk, going for down here. So you would have a wedge, 3 pushes there. And then, probably be reasonable to go for a swing short. So the market wants to get to the open of the day. After that, it's got its eyes on the low of the week. That's really the critical level. Because looking at the daily chart, week opened up here, and the bears want this to close as low as it can going into next week. And the bulls want to create a tail on bottom, but the bears want it to close as low as it can to get that nice solid close going into next week. I think I'm going to start marking whenever we say like a possible swing trade. I think I'm just going to go ahead and just mark it. And then maybe at the end of the day we could review like how, if you add all those swing trades up, how would that look at the end of the day? So you'd be going for at least that. Trading just has to match your personality. There's lots of different personalities in trading. Really, your objectives for trading, whatever you're doing, you want to make sure you're comfortable doing it. You want to be happy. You can't just be miserable coming in every day and stressed out. You got to be taking trades that like work with you. People have different personalities. Some people, they only trade the first see like me, I normally avoid the first 30 minutes, first hour, even though I see what some opportunities on, I usually just avoid it because of what trades I usually like to take. But other people, they'll say 2 bars up, possible low of the day, we'll swing trade up, and maybe they get out below this bear bar after. Or maybe they get out below this bar, possible wedge, possible double top at the moving average. So market is testing the open of the day right now. I think bears have a great case for lower prices. They broke below the support level. Now they've tested it. Their only issue now is that they've hit the target, which is this open of the day. You know, lower probability they get down here, but I think the market is interested in getting down here. So I think today we're going to be live until 2:30. Then we'll go ahead and end the stream at 2:30. So this looks good for the bears, where they've tested up. Bulls have tested up once. Now they've tested up a second time. You know, the bears want this big tail to stay on top, because that would be setting up a double top here for lower prices. So bears that are short through here, You know, whether they sold one of these closes or sold here, it's probably okay to get out of that bull bar. You know, it's a double bottom at support. So they get out above that bull bar, but if they get a bear bar, and they probably want to be getting in again to short below the bear bar. Bitcoin still around that 70,000 level. Probably take at least another week for us to really figure out what it's going to do. Whether it's going to be able to find buyers here or sellers. So that's a good thing about, you know, letting yourself be stopped out of a bull bar like that is, and if you were short here, you see a double bottom, a bull bar, I would go ahead and get out above that. And, you know, if it goes up and then you start to get a bear bar and it starts to go down, you can sell below it. And then the other percent of the time, it just never goes above the bull bar. So you actually just you're able to stay in the short. So you're able to manage your risk while also keeping your potential for that win to stay on. Now, I think there would be sellers below this bar. The bar is a bit large. It's 8 points, or 9 points, and it's growing larger. I think the context is good for there to be sellers below that. So at this point, let's say we had taken this swing short on the tick chart. Once we get this close to getting out, I'd be moving my stop to close to break even. You know, break even plus a couple ticks, so you kind of lock in a little bit, pay for commissions. So good close for the bears. Notice it closed below the prior low here. You know, it closed below its midpoint. It could have done a little bit better to close just a couple ticks lower to be below the open of the day. basically it closed right at the open. But do I think there were buyers or sellers below this bar? I think there were more sellers. And I think the market is interested in getting down to these levels down here we've been talking about. I'm not sure what I had said exactly on this bar, this bear bar. I'm not sure if I mentioned about that being, a reasonable swing, but I mean, I think I was saying I needed another attempt up to fail, which we got here, but then, this is, I think, like I said, I think it's okay to sell below this, but it's not quite the setup I'm looking for. But with this bear bar, at least after we've broken out below the support level, now it turns into resistance, and I get strong bear bar. So I think that's an okay swing short. But that's basically happening at the same time that we were doing this, so it's all kind of the same trade. So it looks like we're close to being able to get out of that swing trade there. Still getting these this bad follow through, just like kind of the whole day. We'll see how this bar closes. See if bears are able to sell it off a little bit in the last few seconds. No, so still a bull bar. I almost have a kind of a mini wedge here. push here, second, third bull bar. So if I was short, I'd be getting out above that bull bar. You know, it's possible the bears have made enough attempts lower here now that if it goes above this bull bar, then they're going to wait for a few bars before trying to sell again. It's kind of like this. You know, they tried here, try to go lower here, try to go lower here. And then because of that wedge, in that wedge pattern, then the bears gave up for a few bars. I wouldn't expect it to go straight up like it did here, but I think the bears will hold off on selling for a few bars if it does go above that bull bar. But if it doesn't, you know, then that's fine. It just goes down, and you just stay in your trade. All right, so if I was short through here, I'd want to be getting out above that bull bar. And now, if the market starts to head down again, well, then you can short again below a bear bar. So it's, you know, no big sweat. Yeah, so we're gonna get off at 2:30. So if you guys have any questions before then, you know, just let me know in the chat. Crude oil, it just keeps on trying to work down to where this open of this big bull bar happened. So this big spike, do a measure move up of that bar, putting up here. Never quite got to it. And you know, we were talking early about this being a like a swing trade there. possible double bottom. If I hadn't gotten out above, if I hadn't gotten my shorts out above this bar, then if the current bar closed how it is now, then I would want to get out above that. Yeah, BP says tough market. Yeah, I mean, yeah, I think today. So anytime I see what I call like a large bar trading range, we've been talking about it all day. Like we have these large bars, but then we get bad follow through, and we're basically just been in a trading range. This is trading range price action. So when you get these large bars and it's a trading range, that's a tough day. And that's why I've been so cautious today, is because I know how quickly these like get double bottom here, strong bull bar, and then that just reverses. I know how quickly these strong moves can just reverse on a day like this. Yeah, who wants to have a bad day on a Friday? I'm not sure it would be worse having a bad day on a Monday, because if you have a bad day on Monday, let's say you take bad losses on Monday, then you kind of set yourself up for a bad week. I guess you can have a chance to win it back. I guess if you have a bad day on Monday, you can have a chance to win it back throughout the week. Yeah, then on a Friday, you just kind of have to like wallow in the pain of having a bad day. You gotta sit through Saturday and Sunday. So we're talking about this swing short. Either you got out on like above this bar, so that would have been like 62.50. So either you got out basically here, or you just said I'm just going to leave it on. I'm only going to trade the tick chart, and you left it on. Well, I think you still should have gotten out at least a couple ticks plus break even. So at a minimum, you would have gotten a couple ticks out of this. Yeah, I mean, look at these bars. We just continue to get these reversals. You know, bull bar, bear bar, bull bar, bear bar, bull bear, bull bear. Now, I'm sure some traders have really cleaned up today. They bet against every reversal, and well, what they've bet on that the reversal would happen, and so they've done that all day, and they made a lot of money. But if that's their personality, then then that's going to work well for them on this kind of day. But then if they try it on a day like this, where it's basically it's more one directional. So if they're trying to, if they're trying to buy through here, it did have some deep pullbacks, but ultimately you're gonna get hurt pretty bad. So that's the thing. Like people have a style of trading in their mind that's they come into the day with a premise of what's going to work, and they trade that way. And some days, like if you bet on reversals happening, then you're going to make a lot of money here. But then when the trend day comes, you're continually gonna fight the trend. And like if you're trying to buy through here, and you're really gonna get crushed during this and crushed during this. That's why you need to have your you need to be able to identify what the day is and trade it accordingly. And if the setups that you want aren't coming, then you shouldn't try to force something. You have your way of trading, and you don't try to force that upon the market every day. You don't come in and try to take the same, like you don't try to take the same thing every day. You look at what the day's doing, and if it's not doing what you want, then you don't trade. You're not going to be able to impose your will upon the market. So we're getting these large bars, but this is a fairly, relative to the day, this is a fairly tight trading range. It's a 10-point range that we have right here for the last 10 bars or so. Now it might not look like a tight range because of the size of the bars, but relative to the day, this is a tight range. And when you have a tight range, you get breakouts of tight ranges. So either this is going to break out up or down. My guess would be down because of our targets below. But once you get a tight range, then that's when like volatility will spike. Is after the tight range. That's when you get that breakout. So because of the size of this tight range, I would expect the breakout to be fairly large. All right, guys, unless anyone has any questions before I head off, then we'll be ending the stream now. So we have the we have the Discord. I invite you guys to join. That link should be in the description. We have well over 100 members now. We have a section here to post your trades. So if you're interested in, if you take any trades, like winning trades or losing trades, I think this is a great place to come in and post it. And you can look for feedback from myself if you want a question answered on it, or if you just want to post your winner for fun and just to show what you did. Just chatting. You can come in here and ask questions to other traders. So I mean, if you want to reach me in any way, I think the Discord, you just send me a message on Discord and be happy to get back to you. All right, thank you guys. You have a good rest of your